Okay, welcome back. You're watching The Money Show on ET Now. Well, just before the show, we were talking about asset classes beyond equity and fixed income. There's a whole realm of investments out there, and we had Anshu Kapoor of Edelweiss Private Wealth Management just sharing the pros and cons of each one of them and what should you consider before you invest in these. Returns is not the only parameter. Look at regulation, liquidity, lock-ins, among the other features. But nevertheless, alternative investments comes with their own complications. Sometimes they are more complex for the retail investor to understand. Enter once again mutual funds. Yes, there are mutual fund products out there that do the tough job for you. They invest in some of these alternative investment classes like gold, realty and infra too. And we are going to be meeting the fund manager of one such mutual fund that invests in equities, in fixed income, in gold, in realty, in infra as well. Doing this tough job is the ICICI Prudential Multi-Asset Fund, and I have with me Chintan Haria, the Head of Products and Strategy with ICICI Prudential AMC. Chintan, hi, and great to have you with us today on The Money Show. Let's start off first by talking a little bit about this this multi-asset fund. It's a wide spectrum of asset classes that the fund invests in. What does it bring on the table for mutual fund investors who traditionally stick to fixed income or equities?
Correct. So I think over the last 4 to 5 years, there has been increased knowledge about mutual funds. And I think investors have also learned a lot about the whole idea of asset allocation. And like you rightly mentioned, that equities was something which mutual funds were associated with. And then slowly over the last 3-4 years, the arbitrage category and the debt category also investors have invested. What the multi-asset category has done is essentially brought the benefits of all of these together in a single fund. And the multi-asset fund invests across equity, debt, gold, REITs InvITs as well. So you're getting the advantage of all of these in a single fund, and the fund manager makes the percentage allocation depending on the market conditions. And for those who are looking at equity plus investing in terms of equity plus debt, gold, etc. in a single fund, multi-asset funds are the right place to be in for the long term.
Okay, so how is it split for the ICICI Prudential Multi-Asset Fund? How much in equities, how much in fixed income, and how much in the other asset classes? And how do you adjust it? I mean, are these ratios sort of written down in stone, or how do you decide on the ratios?
Okay. So from a regulatory standpoint, the multi-asset funds are supposed to maintain minimum 10% in any 3 asset classes at least. So if you look at it, equity minimum 10, debt minimum 10, and gold minimum 10. But from a practical perspective, to maintain the equity taxation, the ICICI Prudential Multi-Asset Fund has anywhere ranging between 65 to 80% in equities. It has debt and as well as gold. And the percentage ratio, like you mentioned, is managed dynamically by the fund managers, not through a model. But if we do have a view that, say, gold is going to give a better return, we can increase the gold allocation. Likewise, if we believe that equities have become cheap, we can increase the equity allocation to as high as 80%. So effectively, this is managed dynamically by the fund manager in the interest of investors. But generally, typically, the range is equity 65 to 75%, debt, and gold would be another 10% each.
Okay, so there's, the fund manager takes a tactical view, take tactical decisions based on his view with respect to whether a particular asset class, be it equities or whatever it is overvalued or it's undervalued, and accordingly decides on what should be the percentage. So, what is your investment strategy for the, for the equity portion? Because obviously that's a lion's share, 65 to 75%. What are the equity classes you consider? And yeah, if you could just talk about that first, and we can talk a bit more about diversification then.
Yeah, so if we look at the equity portion of the multi-asset fund and the way it has been historically managed, it is a very unconstrained way of managing, wherein wherever we feel on a counter-cyclical basis, there is money to be made over the next 3 to 5 years, the stocks and the sectors where the valuations are cheap and the next 3 to 5 year outlook is good, you will have basically access to those sectors through this fund. And today, if we see, you may ask what are the sectors that we like. Clearly, telecom, power utilities are something where there is an overweight, and also financial services, especially the corporate banks, is something which we like. So the focus of this fund is to ensure that investors get their money invested in the right space, keeping the risk reward in mind, with the ultimate objective that over the next 3 to 5 years, through the right allocation between the various asset classes, as well as through the right allocation within equities in the right sector and stock, in an unconstrained manner, the investors' risk-adjusted returns are appropriately maximized in the next 3 to 5 years.
I was just reading a very interesting note, and I was talking to somebody from the market, and this person said, and I quote, on a daily rolling basis, the multi-asset fund has never delivered negative returns in the 5 and 10 years period. I think this is quite a mean feat to achieve. But do you think it's this whole asset allocation where you get equities and then gold as well, which is automatically a hedge, against the fall in equities, that's creating this kind of, resilience in the fund? And also, how are you, let's talk about that. Let's talk about the risk bit as well. Do you think that maybe the ICICI Prudential Multi-Asset Fund relatively then carries a little less risk than perhaps ICICI Pru's large cap or mid cap fund?
So I would say, because you have diversification into asset classes, for example, if gold is, let's say, part of this overall portfolio, and there is volatility in the market and inflation runs up, typically if gold does well, gold will act as a hedge against inflation, and gold will support the investors in terms of the fund returns. On the other hand, on the equity side, like I just mentioned, that because we have a counter-cyclical approach, we are not following the trend. We are basically very conscious on the valuation and the cycle in which a particular sector is. That has also helped what you just mentioned. That has also helped that in the long run, we are in the right space at the right time, and hence don't get caught off on the wrong foot, even on the equity side. That, I think, has also played a very big role in ensuring that the investors' experience in this particular fund has got is good in terms of the 5-year, 10-year returns, which you just mentioned. And of course, the debt part, including, I would say, the current new instruments which have come in, which is the REITs and InvITs, which are also the fund can invest in. That is also helping in terms of the potential yield enhancement in the future. So I think this fund, because of its ability to invest in REITs, InvITs, debt, gold, plus the way it is counter-cyclically managing equity, it is a good fit for investors who are looking at longer-term investments and want to be in the right space based on valuation.
And how would you say, how would you classify the risk aspect as well of this fund versus a large cap fund, a mid cap fund? What I'm trying to say is, holding ICICI Pru's large cap fund, ICICI Pru's mid cap fund, maybe it's long duration and, short term duration fund, plus it's gold ETF versus holding this multi-asset funds. How would you, value both these portfolios?
Yeah, so typically it is very difficult. So if an investor is very clear on the asset allocation and invests in these individual funds which you mentioned, and stays invested in a disciplined manner, is able to take out the money, invest the money in the right manner, in the right proportion, let's say between large, mid and small, and is able to carry that well, then yes, then the investor may end up having a better experience. But we do all of this in the multi-asset fund itself, and probably that's where in terms of risk reward, probably this would be better because you're getting everything under one roof. At the same time, of course, through the use of various additional techniques such as the covered calls, which we also use in this, we're trying to enhance the yield of the investor. So essentially, in terms of risk, because you are getting a diversification in terms of asset classes, because we are managing the fund counter-cyclically, the risk comes off to that extent, or comes down to that extent, relative to fully invested funds, where an investor may necessarily not know when to go aggressive or when to go defensive in terms of allocation between the various options which are available.
You spoke a little bit about in your presentation as well, says that about how you have you've got InvITs which essentially help in improving the yield. So if you could talk a bit more about how it does that, what's the role that this small portion of the portfolio plays in increasing the yield of the fund?
So I think about last year or last to last year, there was a regulatory change in which the REITs and InvITs were introduced as part of which we can invest. So up to 10% of the portfolio can be invested in infrastructure trusts and in real estate investment trusts, which is a growing trend in India in terms of various infrastructure projects being funded or real estate trusts being created. And they typically have a slightly higher yield as well. And there is a participation if there is a growth in that particular real estate investment trust. So in terms of the current market environment where yields are on especially high quality debt is very low, real estate investment trusts and InvITs are providing slightly higher yields, and that opportunity as and when more offerings come in. Currently, it's in the nascent stage, and we have limited investable opportunities within REITs and InvITs. But much like the West, where this is a very large market, REITs and InvITs, we see that in India also it can become very large, and up to 0 to 10% we can invest in this fund in REITs and InvITs, where the yields are slightly higher relative to pure, let's say, high quality debt. And that's where this can also be useful in the investor getting slightly higher yield on the debt portion or on the REITs InvITs portion for this particular fund.
Okay, all right. Well, I think with that, we are out of time as well. So thank you so much once again, Chintan, for joining us today on The Money Show and, helping our viewers out in understanding a little bit about the ICICI Prudential multi-asset funds, the role that they play in an investor's portfolio, the risk as well that it carries vis-a-vis each individual fund in equities, in debt and in the gold portion combined.
Thank you. Take care.